I've got Meltem Demirors here, Chief Strategy Officer of CoinShares. I wanted to start by talking a little bit about the talk that you gave just a minute ago. We're here at Mainnet, and you were talking about liquidity and how liquidity will be fungible. So first of all, a lot of syllables.
A lot of words,
yeah.
a lot of syllables.
What does it mean, basically?
Okay, so the basic premise is, right, historically the way we think of liquidity has been constrained by a specific asset class or a specific market venue or market that you're trading in, and it's constrained to market hours, right, which in traditional markets are 9:30 to 4. In crypto land, we've created this new market microstructure, new plumbing for markets, and what that allows us to do is conceptualize liquidity in a new way. And so really what I wanted to do with the talk is sort of talk about all of the ways that liquidity has come into the crypto ecosystem, all of the different innovations that have been created, starting with bringing dollars into the crypto ecosystem via stable coins, which are now 6% of overall aggregate crypto market cap. Then we had the advent of wrapping assets and porting them across different chains, primarily all of the wealth that was created in Bitcoin, all of that collateral, making it available and usable as liquid collateral and other protocols, which I think is really interesting. And then now we're going through this amazing and intense, insane explosion of layer 2s and bridges that are allowing all sorts of assets to move across all sorts of protocols, whether those are L1s or L2s. And so the talk was really, honestly, when I talk about something, it's mostly for me to learn about it as well and force me to organize my thoughts. So my takeaway as I was thinking about it was wait a minute, just we've made tokens, these fungible assets, we're going to make liquidity itself a fungible asset. And we're already seeing this, right, with liquidity positions, right, in the way Uniswap v3 has turned a liquidity position to an NFT, right, that you can sell and buy. So I think this idea of making liquidity itself fungible is really interesting. And then the implication of that is all assets, right, that are compatible with the blockchain will become liquidity that's tradable, accessible across all of these different ecosystems, and anyone, anywhere can become a market maker, which I think is pretty interesting. Provide liquidity or use liquidity from liquidity.
So you mentioned NFTs, non-fungible tokens. So how do NFTs get involved in fungibility?
Okay, so super fun. Okay, so the way it works is when you create a liquidity position, right, you put assets into a pool. The way it works in Uniswap v3, which I think is really interesting, is when you put those two assets together, in the past you would receive, in v2 you received fungible tokens, where based on the amount of tokens you put in, you would receive some pro rata number of tokens at a prefixed exchange rate that reflected that LP. Right, and then you could trade those tokens themselves representing the LP interest, right, which is also pretty cool. So liquidity was fungible in that way. Now what they've done in V3 is instead of getting issued tokens, you get issued an NFT that represents the aggregate liquidity position you have, and that NFT itself becomes tradable. So anyone who holds the private key to that NFT, right, and can prove ownership, can liquidate the position, take out the funds, trade the funds, use that liquidity. So I think it's pretty interesting, all of these things are starting to come together, and really what I think the objective is all assets everywhere that have value will become liquid and usable as collateral in on-chain transactions in markets that operate 24/7, 365 on a global permissionless basis.
So all of that super interesting, but it
a lot
also
of words.
Yeah, a lot of words, and
I'm working on it. It's a few more weeks. I'll simplify it.
But at this point, it loses my mom and 95% of the market out there.
Yeah.
And, even here, there's a lot of folks that a lot of that's going to go over their heads, right? So are we seeing any sort of split right now between crypto and assets for hardcore and for general populace?
No, it's not that there's a split between them. I think it's more that most people don't understand how markets work.
Yeah, nobody knows finance writ large, let alone crypto finance.
And so the stage I think we're at right now, and what my objective was today, is to give people a little bit of background as to what I did in my past life and what I know about markets and how it's translating into the crypto space. And ultimately, people don't need to know any of this, right? You don't need to know any of it.
It's all what's under the hood.
Exactly. Yeah. But I think the reason I get so excited about crypto, it's precisely what's under the hood that's so interesting and so intellectually stimulating. And once you start to understand it, I love making people feel empowered. So if I can teach people a few new terms or make them feel more confident that they understand a certain concept, and I'm great, I've done what I'm here to do. So I guess Most of the things I talk about are really, again, forcing functions for me to be like, how do I organize my thoughts?
Well, it's super interesting, and I encourage
There's a
everybody.
lot.
I encourage everybody to check it out because it was also a big brain blown moment.
I think I said at one point, did your brain explode? Because mine did. So I kind of
Mine exploded about 5 seconds after because it took me a moment to process.
I front ran your brain exploding. But if we can make that fungible, right, and put it on chain, then sorry.
So I want to switch gears real quickly.
New lows even for me. My humor is so sad.
Oh, I found, I was laughing at the pun that
I had bad jokes.
But can we switch gears
Yes.
real quickly and talk a little bit about institutional? So we've been talking about what's under the hood for kind of everyday consumers, but also probably it's not just for...
No, you're making a delineation though. So this was my whole point, right? In the traditional finance world, right, there are institutions and then there's the plebs, right? And the plebs trade on Schwab and the institutions trade on ICE, right?
Right.
And really what crypto is doing that's so fucking exciting to me is everyone's trading on the same market. There is no longer a delineation between institutions and individuals. And my whole objective is individuals are institutions.
But aren't individuals going to get screwed? Because institutions are always going to have more information, more data to work with. The little guy is eventually going to lose to the Goliath.
Right, but this is what I think is so cool about crypto is the edge that institutions have historically had is more difficult for them to capture in crypto because the edge, right, can be captured by anyone with an internet connection who spends time in these communities. There are people in Discords who are making more money than an institution ever will because they're actively participating in these communities and they're front running all of us basically because proof of work, right? They're putting in the work and the time and the energy and taking the risk, right? So there has to be the desire to take capital risk. I think the biggest issue is people don't want to take risk, they want the reward, but there's always going to be a trade-off, right?
Right. Do you see an end game where institutions try to co-opt individuals or bring those individuals on board?
We see that happening already, right? Institutions are trying to hire their crypto person. They're oh yeah, we'll get a guy with tattoos and purple hair and that's our crypto person and that'll make it look cool. I'm that's not what we're trying to do here. So we see that happening, and I think to a certain degree, right? We also see certain parts of the crypto ecosystem that are very centralized are evolving towards more traditional business models because they're extremely lucrative. Monopolistic behavior is extremely lucrative. There's a reason why power laws exist in the world of large organizations, and the fact that we can have management without managers, right, I think is difficult even for crypto companies themselves. A few people came up to me after my talk who work at large centralized crypto companies and they're I'm working on the wrong thing. And I was that's, but I myself work for a centralized company, right? So I think there's sort of this interesting ideological tension that we all sort of grapple with is are we part of the problem in the sense that the innovation and where the capital has flowed so far to date in our industry, right? A lot of that has been, effectively rebuilding banks and custodial institutions.
Yeah, and can you talk a little bit about what you do at CoinShares and the types of clients that you've been working with, both on the institutional side and...
So I have the best job in the world.
Yeah.
I think, maybe. So CoinShares, right, we have an asset management business, a trading business, a market infrastructure business. And so all of that is regulated activities. It's fully custodial, so very traditional. We think a lot about risk and managing risk, and it's a lot of compliance involved. So that's sort of the core of the business, right? And then I get to sit in this really cool bucket where I get to figure out what's going to happen 2 years from now, 3 years from now, 4 years from now, 5 years from now.
What is going to happen?
I get to invest in it, I get to build around it, and I get to help us figure out, right, how do we build our organization and orient CoinShares around all these crazy things that are happening. So we're now starting to experiment more with DeFi. We're running nodes in different networks. We're looking at, liquidation bots and different really interesting opportunities that are emerging. And so I sort of get to figure out what should we be spending time on? What should we be building towards? What is the future we foresee for ourselves? And then to help us sort of pivot the organization in that direction.
So let's look a little bit about some organizations or some businesses that have been around in a long time and their evolution and how they are trying to figure out what's next. So Coinbase,
Yeah,
the
bank.
original
Yeah.
exchange.
It's a bank. It's a bank that doesn't want to be regulated as a bank, which is why they're no longer going to pursue sort of lending, right?
Okay.
Because that would very clearly make them a bank. But I think like when you get to a certain scale and in size, and arguably Coinbase is at that scale and size, right? They have a lot of assets. They custody those assets. They play like effectively the role of a SIFI in the crypto ecosystem, right? A SIFI is a designation that was created after 2009 financial crisis as part of Dodd-Frank. It's a systemically important financial institution, right? And there's a certain designation based on like the assets that these institutions have. But I would say in our industry, there are a number of firms that have effectively become SIFIs, and I think it's very unclear like how they will maintain their crypto ethos when everything around them is pushing them down a very sort of narrow path, which is beating.
Well, and it's SIFI, so that means kind of too big to fail for the crypto
too big
ecosystem?
To fail, effectively.
Okay.
So here's an exercise that's fun to play.
Okay.
Well, not fun, but...
Not fun if you hold a lot of crypto.
My concept of fun is like interesting.
A fun thought exercise.
Okay, there we go. Let's say, for example, let's like make a hypothetical assumption.
Okay.
Let's say Coinbase custodies 10% of the Bitcoin in the world.
Which is probably not far off.
Yeah, I would say like 5 to 10% is probably a realistic number. So let's say, for example, that what happened to the DAO, right, where 15% of all Ether in circulation was drained from the DAO as the result of, I refuse to call it a hack, it's a smart contract bug.
Okay.
Technically not a hack.
I'll give it to you.
And then, so say that something happens and 10% of all Bitcoin in circulation is drained from Coinbase's custody.
That is a good news day for us.
What? You're like, I'm getting a lot of clicks. Like, I might get a Pulitzer Prize for my excellent journalism.
Not a great day for everybody else.
Right, but the question is, right, like, what do we do? What the Ethereum community decided to do, right, is roll back the chain, and they compromised immutability to restore the Ethereum network to a point in time before the DAO had been drained.
Mm-hmm.
What do we do? Like, I can't say with any confidence that Bitcoiners would be immune to that behavior, right? Like, do we throw immutability out the window? So I think there's like these really interesting ideological sort of conversations that we have, but when you think about them and play them through, right? And there's always like, oh, well, Bitcoin maxi said this. Like, I'm not a Bitcoin maxi. I'm not an anything maxi. I'm like a pragmatist. If 10% of the Bitcoin was stolen from custody, like, I think there's a lot of institutional money at play. I think there are a lot of people who would be very much in favor of using their political influence, their social influence, their financial influence, their regulatory influence, all of the tools at their disposal to make themselves whole, right? And so I do think it starts to beg this question of, as we create this new world, right, like, what trade-offs are we making, and are we really practicing what we preach? And I would say in a lot, and again, I myself am suspect number one, guilty as charged, but I do think it's an important conversation to have with yourself, and I think the goal is, obviously to push more towards that arc of decentralization, but there are very real constraints. It's very real.
Well, I mean, if it's true decentralization, I mean, it's a conversation that everybody can decide on collectively, correct?
No, I think decentralization exists on a spectrum, and I don't think it's objective. Like, there is no decentralization yardstick or scorecard, right?
It would be
People
good
try
to
to
create
create. Okay, so there was this great website called arewedecentralizedyet.com.
Right.
If you remember it. I think Messari maybe tried to buy it back in the day. Like, Ryan and I were quite keen on it. So there's that website that looked at like protocol level decentralization, network level decentralization, and sort of like application ecosystem or asset level decentralization. So there's different measures, but there isn't like one objective measure. It's like very much a spectrum. And then I think the question is like, is this more or less decentralized than the alternative?
Right. Gotcha. Okay, so we talked
Which
about...
is not answering a question.
It's fine. No, it's fine. I'll give it to you. So we talked a little bit about Coinbase, old school exchange. Let's talk a little bit about your take on blockchain, original wallet.
Yeah.
I think 75 million Bitcoin wallets out there.
Yeah. Blockchain is, a very interesting business. It's a referral business, right? So they make money when someone who uses their free wallet goes to a partner exchange that's promoted on their platforms.
Yep.
Basically, they generate like millions of qualified leads and then generate revenue, and they push them to complete an action on a partner site. They've now delved into a bunch of different stuff, more on the institutional side, I think around like lending and borrowing. But yeah, I think at the end of the day, the question is like, how valuable is the crypto audience as an audience to market to?
Yeah.
And I think, again, if we look at the crypto audience, right, the average deposit on a crypto platform is 2 to 3 times higher than what you'd see on a traditional financial platform. And then even better, right, the cost of acquisition for a crypto customer is extremely low. Like the average cost to acquire a banking customer, a new commercial banking customer, if you're a commercial bank, is anywhere from $600 to $1,200.
Really?
Yeah.
Okay.
Right. And so the lifetime value of that customer, you probably need them to be a customer of your bank for at least 2 to 3 years before you break even.
Okay.
Right. And so as a result, the churn in traditional banking is very low, right? Like 96% of deposits never leave.
Right.
Right.
Okay.
So the churn's only 4%. If we look at crypto, right, cost of acquisition is lower, lifetime value is much higher.
Is that because new people are coming into the crypto space all the time?
Yeah. And it's like crypto doesn't necessarily use like paid search as much as crypto Twitter, right? There's like all of these informal marketing networks, and you can get a lot of attention in crypto by spending relatively little capital, right? All it takes is like give someone a microphone and give them a stage. My new coin will be launching next week. No, I'm joking.
What's it called?
Does that have a name? It's a symbol. I identify as a symbol now. Okay.
Well, that would go to the top of
100% correct. Sorry, what I was saying is the churn though on crypto platforms is much higher, right? So there's these really interesting trade-offs we make. So like all of a sudden the distribution potential is much greater, the cost to acquire customers is much lower, but the propensity of that customer to churn is much higher, right? Because if I'm staking my assets on Coinbase and getting like 6% and I see yield farm over there that's 30%, right? Exactly.
Yeah.
So, and also assets are much more fluid, right? If I pull assets out of my bank, the only option is another bank or my mattress. If I pull deposits out of crypto, right, there are 1,000,001 places I can stash them. I can move them to another wallet, another exchange, my own non-custodial wallet. So again, I think there's this really interesting paradigm where we haven't yet seen what the world will look like, what the internet will look like when people actually actively start marketing to the crypto audience. But I will tell you this, I've invested in 250 companies, more than 250 companies in the last 7 years.
That's a few.
Advertising to the crypto community is a very, very, very good value proposition. And I think more brands should do it.
Okay, let's do one more.
Okay.
One more company that's been around for a while and it's gone through a lot of changes. BitMEX.
Oh, yeah. BitMEX. BitMEX created the perpetual swap, right, which defines futures markets, derivatives markets, I should say, in this industry. And like the perp is such an interesting product construction, right? And
I don't think everybody understands what a perpetual contract is.
So let me can I finance?
By everyone, I mean me.
Okay, can I finance talk for a second?
Yeah, do finance talk.
But this is again why understanding like these tradfi concepts is important and is relevant.
Well, they're all coming over.
Exactly,
Yeah.
but they're changing, right? Okay, so in a traditional market trading hours are 9:30 to 4, right? If you trade oil, market closes at 2:30.
Right.
So like there's all these different nuances. But
You'll tell me why later.
Market trading hours, I'll tell you why. I met the guy who created the oil contract. His son got out of school at 2:45.
Oh my God.
So he needed to leave it. I don't know if that's a real story. That's what he told me when we had lunch, but I don't know. Okay, so 9:30 to 4, right? Markets are open, markets are trading. So markets have an open, markets have a close, right? So when I create a contract where I'm betting on the future, right, or what price something will settle at the end of the day, I have a price that I can quote at the end of the day that's like, this is the price at which the contract settles. Okay, crypto markets trade 24/7, 365. How do I establish close of market?
Couldn't you just name an arbitrary time?
Who gets to decide the arbitrary time? Now, even more importantly, there's not one single order book. There are thousands of different order books. So what order book price am I going to use?
I have no idea. You're going to tell me.
And in the early days of crypto, right, you have to remember 2013, 2014, 2015, liquidity on these exchanges was not great. So bringing back the liquidity topic, spreads were fairly wide, like so fucking wide, you could drive a truck through them, right? You could have spreads that were, 30 to 40% different depending on what platform you were looking at. So how do you establish consensus on what time you'll mark and what price you'll use, what reference price you'll use?
So you just don't. You just take away time as a variable.
Okay, so what they did effectively was this. With a perpetual swap, they took away time as variable and they created an index, right? That was sort of like a blended average price based by volume and market sort of depth index. But what's really interesting is they introduced a new mechanism as well. So typically in options markets, the way you fund your positions is through netting, right? So if I have a net long position, if I have long position, short position, but they're in equal size, then they net out to effectively zero.
Okay.
Right? So I can borrow on both sides of the book. Sure. And because I net out at zero, I don't have to put up that capital.
Right.
In crypto markets, I can't net my trades. Yeah. So where's the funding going to come from? So the perp swap was this really unique product construction where you created sort of this 8-hour metric where every 8 hours you would look at the contract and where Bitcoin was priced, right? And there was something called a funding rate that you have to pay to keep the contract open, and it flips, right? Depending on what the price of your contract is, it'll flip from the buyer paying the seller or the seller paying the buyer.
Right.
So depending on what side of the book you're on, you're either getting paid or you're paying up. So you're paying to keep the position perpetually open. So that's why it's called the funding rate. And it's effectively kind of like a barometer for how expensive it is to be long or short. And so it's so interesting because this is something that would never exist in traditional markets, but now perps have like absolutely exploded as a category. And again, because of these fundamental changes in market microstructure, right, which collateral is hyperfluid, moves very quickly, markets are open 24/7, 365, there's not a lot of leverage. It's very hard for me to borrow from a prime broker, right? Everyone's like, oh, well, like what if a blow up happens in crypto? I'm like, it doesn't really happen because positions get unwound very quickly. And in terms of like net leverage, there's not a lot of net leverage in the ecosystem because you can't margin, you can't net positions. So again, I think it's so interesting to understand like how these product constructions work, why they work the way they work, because it all kind of fits. Okay, I'm a huge loser.
No.
Just like, please stop talking. I just get very excited about it. I think it's so interesting. And then again, I think it introduces like these entirely new paradigms that people in TradFi have never thought of. But the minute you talk to a trader,
right,
and you teach them about crypto markets, like their brain literally explodes because they see the 1,000,001 ways that they can make money.
Well, so stuff has been borrowed from traditional finance and been kind of it's kind of evolved. Do you see it going back over in the traditional finance?
And here's why: traditional finance can't innovate.
Oh, okay.
Can't innovate. And here's why. No. And here's why, right? Like the modern financial system is built off of Excel spreadsheets.
Yes.
Right.
Literally.
And so the issue is, right, so basically what we did when we turned money into information, right, and I was explaining this in my talk, like if I have a shiny piece of gold, a rock, right, and I give it to you, I don't have the gold anymore, you now have the gold. Right. Okay. So it settles with finality.
But if you tell me a story, then we both have the story.
Exactly, right? So if I give you an idea, then or for example, if I copy a word, if I send you a file and you send me a file, then we both have two files.
Yes.
Unless you delete the file on your end.
Right.
But how do I know that you did that?
You don't.
So basically financial markets today, banks, financial institutions, this is literally what like 40 to 50% of the people and infrastructure to bank do is figuring out, okay, when I move this thing from my account to Jeff's account, are we deleting the right thing and moving it to the right place and making sure it's not double account?
Right. Which is a tremendously inefficient way of doing things.
And it is what it is. But I think asking like the traditional financial system to change, it's not going to, because this whole massive, colossal institutional apparatus has been built around the world functioning in this very specific way. And I think, again, it's very difficult for people who have spent their whole lives viewing the market through a very specific lens to even conceptualize a world in which what we're doing is possible, works, scales. And so I think it's very difficult to see the existing system changing. I think more likely what happens is, as a result of all of the liquidity that's available in crypto and the new ways you can utilize collateral that's effectively dead weight on your balance sheet, more and more assets from the tradfi world start to flow into crypto world. Right? It's just like slow. That's why I think like crypto markets in a way are a giant black hole for liquidity, because you make liquidity fungible, right? If you have an asset, you can take it and use it in 1,001 different ways. You can collateralize it, fractionalize it, trade it, secure it. Like you can do all of these things that historically you couldn't do, and you can trade it 24/7, 365, peer-to-peer without having a centralized counterparty and never talking to a bank, which like, please sign me up. I just transferred shares from a European market to US market. Do you know how long it took me?
I'm gonna guess 6 days.
6 months. Moving some numbers in a database from one place to another. Moving numbers in a database.
But don't you exist completely in the crypto world?
I want to, but the reality is I don't.
Oh, okay.
Because not everything's
right.
And not everything is on chain, right? And I think again, like what I think people don't realize, I was a management consultant. After I traded, I became a management consultant, which is like a grave mistake in many ways, but I learned a lot. And what I learned is there are large institutions in our world today who think that implementing DocuSign is digital innovation. They think that moving to a cloud like document storage system instead of saving stuff to bare metal is like corporate innovation. And again, that's not to
denigrate, but
no,
just
not
to
to,
say,
but it's just it's a helpful sort of measuring stick for where we are. Like for most people, the whole concept of digitization is like the starting point, and we're operating at like digitization so far out on the spectrum that I think it's very hard for people to internalize it.
So let's wrap up real quickly with what is the current innovation or the innovation that we're on the precipice of that you're excited about?
I'm really excited about liquidity becoming a fungible asset, moving cross chains. Collateral has already become fungible and can now move cross chains and be utilized in a bunch of different applications. I think one of the big things I'm really excited about is to see where the state of governance leads, if it leads us down sort of the same path that corporate governance and other types of governance have led us down, right? So I think on the social side, there'll be interesting innovations. But honestly, I think at the end of the day, for me, crypto has always been, will always be a capital markets story. We're building the world's first 24/7, 365, fully global, fully digitized, peer-to-peer open market.
Right.
And that is just the most exciting concept in the world.
Okay. Meltem Demirors, CSO, CoinShares. Thank you.
Yeah.